Hello, everyone. We are back. The Prospero.ai stock market live streams. Welcome into the stream today. The markets are red across the board. We are down the most on the SPY today. Oh, no, the QQQ. So a little bit of hesitation heading into NVIDIA earnings after the bell, which we will be covering on the stream today. Seems like people are getting a little more nervous than they may have been in the past couple NVIDIA reports. We mentioned how the last time NVIDIA had earnings, there was watch parties in some places across the country. Doesn't seem to be happening today. One of the things we covered on the last stream, which is a theory that's been going around social media, is that the SMCI debacle might affect NVIDIA. There's been no clear evidence of that yet, but some people are theorizing it. So maybe there's actually real concerns heading into NVIDIA earnings, but we'll know soon enough. Then we have another stock that just reported, Target, which is down over 20% today. Hello, George. Welcome to the stream. So we're going to discuss Target. This comes right off the heels of Walmart having good earnings, and Walmart's been a beast as a stock this year. So very different things happening in those companies. We'll get into all of that. And then we have crypto going nuts. MSTR stock just keeps trading higher. Michael Saylor's net worth is booming. There's an interesting story about how he's going to talk to the Microsoft board. So we'll talk about crypto and Bitcoin a bit. And then ELF, another company coming under pressure after a short company, Muddy Waters, released a report about how they think that they overstated their revenue in the past 3 quarters. So we'll talk about what you should do as a shareholder in that company. And if there's any recourse, if you're a shareholder in a company that has any kind of fraud that comes to light, if you can get your money back, if you're in options or a common shareholder. And the legacy media business continues to stumble on TV networks. Comcast announced that they are going to spin off many of their networks into a new company that's estimated to be about $7 billion. We'll talk about if that's interesting at all, the companies that Comcast is keeping under their name, and why they would even do this in the first place. And I wanted to bring up another more legacy company today because it's following the Disney route where it does nothing for years and years. So I was taking a look at Nike, and they're down a third this year and 22% over 5 years. So when you see a brand name like Nike, you wonder if there's value there or if it's a value trap. So we'll talk about Nike again heading into this holiday season shortly, where you'd think it'd be good for Nike. And then last but not least, before we turn it over to the model portfolio update at the very end of the stream, we are going to be discussing the meme stocks because they are starting to rally a bit. You know, as crypto's going higher, as the market spirits are going higher, it seems that these stocks always catch a bid. So are they the new fear and greed index of the market, or is there something more going on with them? We'll get into all of those details. But George, today we have to start with NVIDIA, obviously a major event taking place after the bell today. NVIDIA earnings have been of extreme importance as the markets rallied on this AI wave of innovation. What do these earnings mean for not only NVIDIA, but the stock market going forward as we're seeing, everything's red today and it's kind of been choppy recently?
I mean, NVIDIA has become such a bellwether for the whole market. I mean, especially tech, but the whole market. But there's so many other things at play. Like, not only will I be looking at what they're talking about in terms of just like looking at chips as a whole and AI as a whole, right? They are going to be an indication of whether AI has slowed down. And I mean, we've gotten some other indications, right? Like cloud computing is doing very well, right? With all the major cloud providers. So we've gotten some indications, but I would say chips are even further ahead in the cycle than cloud computing in terms of just like the demand, because part of it is, the cloud providers are not, they're going to be looking at they're going to be looking at future orders for those, right? Not just past. And that's going to be just an indication of how much they see the demand way forward, right? And we all know that this is, going up still. And there's, AI is just getting started because we haven't even gotten to a lot of the applications, but we're definitely going to be looking to them, the orders, their guidance for the indication of exactly how much steam we have going in terms of the perception around AI. The other thing that I'm going to very much be looking to Jensen Huang and NVIDIA about is a topic we've been talking about, which is China, right? And tariffs and the current administration. I'm actually very interested to see what, if anything, Jensen Huang says about his concerns about how a Trump administration could have and tariffs could potentially affect the number of chips that are going into China, or how that relationship happens. Like, keep in mind, the only thing that's ever affected NVIDIA's earnings in the last, I'd say, year plus is Jensen Huang issuing some concern about China and demand and the geopolitical situation there, right? So I think, sitting where he is, he's got a lot more data, a lot more input, actually a lot more relationship with China than I do. And the companies there, and those companies are going to have a much better indication of how their government is thinking than we are on this side, right? So I think that that is one thing that I'm going to be watching very closely. I wouldn't hold NVIDIA. I'm not really holding any chips right now. I've got some tech plays. I've got AppLovin. I've got CYBR. I believe those are my only two high conviction tech things right now. I just don't like chips very much. And if Jensen Huang's very confident that there's going to be no issues with this administration and potential demand for chips, I would be feeling a lot better. But not until I hear him say that. And I'd be very cautious. And I'm even considering selling some of the other tech stocks, just because if the market doesn't like what he says, I think that could bring the whole tech market down.
So I know this might be a tough question to answer because we don't know exactly what NVIDIA is going to say, but I guess we could theorize about it. If there is a very negative reaction to whatever is said on the earnings call, and say the stock is down 10, 20, 30% over the next, days, weeks, months, it would seem to be setting up for a buy the dip eventually, right? Like, are you worried at all that this is the cycle top for NVIDIA and like it could change completely? Or if there's a dip and, would it look attractive eventually? I know we don't know like some of the tail risks you're talking about. We don't know if they're going to crystallize or not, but just like in probabilities, I guess.
Especially because part of this is how like tensions could end up in a Taiwan situation. There's kind of no limit to the downside in a Taiwan situation, right? In a situation where there's a military conflict as it relates to Taiwan, right? So that's the hard part about these geopolitical things, right? It could just start with some issues over tariffs and they could escalate. So, that's why my attitude is it's all about relative value. And we discussed this Monday, right? And it's just like at the end of the day, like with Coinbase sitting at 100 upside, 100 net option sentiment, right? I'd rather, and I have 2 Coinbases right now. I'd rather load up on higher conviction things like that than take a risk on NVIDIA, because it is a risk, right? And even if Jensen Huang, says a lot of reassuring stuff, I still think that valuations got very high, right, for those chip stocks, right? And part of the justification for that were they were just growing so much, and I didn't really see any big short-term risks other than this, but this was like a smaller, this was kind of like a smaller issue. But now, like, especially until we see what happens with tariffs, that's a major unknown. The market doesn't like uncertainty. Until we see, things like how the Trump administration communicates with China, what kind of relationship we have when the new administration takes place, because traditionally he's had a very hard line relationship with China, at least relative to the Democrats and in the public sphere. So yeah, I mean, and he said that comment about like Taiwan needing to pay the US for defense, right? So he clearly has some ideas on this, and until we see them play out, I think it kind of creates a cloud of unknown, potentially, unlimited downside for chips, especially Nvidia that sells so much into China, right? It doesn't mean there isn't still upside, right? There is, but it's too much downside for me when I see other better, when I see reward plays that just don't have the same risk.
Well, for people who don't always or haven't viewed our stream for like the whole, I don't know, almost 2 years we've been doing it now, you've been very bullish on chips and AI throughout almost the entire time. So me hearing this, I notice a definite shift. So I think it's really something to focus in on for our viewers. I see we have a question from Jonathan also. Is there a reason why you prefer APO over AXP?
Higher net option sentiment. I just looked at it. I mean, what I could say is that AXP doesn't really come up in my screeners, right? But the answer to that is net option sentiment, right? Apollo's at 87, AXP's at 54, right? 54 is not really viable for me. And I've actually been with APO down today a couple times this week. I've been watching that option sentiment closely, but as long as it holds those levels, right, I'm still bullish on Apollo, and 54 doesn't cut it for me for a long on AXP. I mean, the only way I'd ever consider something with like a 54 net option sentiment is like maybe energy. That tends to run lower in net option sentiment on a lot of our different metrics. Real estate is another one that I would consider with the right setup. But when APO is sitting there as an alternative at 87 and AXP is at 54, it's just not what I want. But I will say it does show how bullish the market is on financials, right? I saw APO and AXP both at 90 plus upside. So that really shows how this administration has changed the perception of financials, right? And if you have a large portfolio, not a bad idea to own both at like on a 1 year timeline. Both are 90 or above. But obviously for us, at a portfolio of less than 20 stocks, we don't necessarily want multiple exposures to financials, especially because coins like financials associated. So yeah, just a simple substitution there. But if you're talking about like, over 30 stocks in your portfolio, then you might want both.
So I have one more question before we move on from this topic. Obviously, all of the AI stocks have done very well. I'm wondering if that whole thesis begins to change. Could investors that have made money over the past year or two use these stocks as a piggy bank? And would that actually be good for other areas of the market like Coinbase and crypto or other areas that haven't rallied? Would they get new inflows, or would it be net bearish if the AI story started to turn?
For financials?
Not for any sector specifically, just any other sectors that maybe haven't caught in a bid. If people like went to turn over their money from Nvidia or the AI sector to any other areas of the market, would it be beneficial for them, or would it be just net bearish overall, since those stocks are so important to the overall markets right now?
Yeah, I mean, I think if you're overweight tech or chips, like we become more bearish on, like financials are a great thing to diversify to right now, or you're just, overweight anything and underweight financials, right? I think these are two names you definitely want to consider. Obviously, we would prefer Apollo. But if there's one thing that the market has been very, very clear on since Trump got elected, is that they expect regulations to be positive for stocks, and they expect financials to be a big winner there. I mean, people have been treating financials, more bullishly than even tech, and AI was supposed to be a big thing regardless, right? But there's a big change to how financials were viewed under, the Democrats and Trump. And I mean, if you looked at the way like Kamala Harris was talking, she was talking about like certain taxes on high net worth individuals over like, I don't actually think it was actually going to happen, right? But it's a very different tune than Trump was singing. So I think the market was hedging a little bit for the potential of Democrats to kind of come after higher net worth individuals, come after financial institutions. But now it's like, the direct opposite. I think people expect friendlier regulations, a friendlier environment for stocks. And so, yeah, if you don't have financials exposure, could be a great time because financials look like they have, maybe not the same upside, but a comparable upside to tech without the same risks, downside limitations. So yeah, definitely something you want to consider right now if you don't have exposure.
Mm-hmm. So two stocks I wanted to bring up today because they both reported this week. We got the retail giants, Target and Walmart, both moving in opposite directions today, past couple weeks, and even like on a longer time frame. So Target was down 20% today after they had the biggest earnings miss in over 2 years. And Walmart had earnings also, and they're up, and their stock has been a beast this year. And something that was interesting that was shared online was that Walmart grew the most amongst their customer base with people that made 100K or more. And they were talking about how this is kind of where Target's bread and butter was. Like that was kind of the core of their customers. So it seems like they're kind of taking from Target. How do you think things will shake out for those two companies going forward from here?
Yeah, I mean, I think one thing that Walmart has done very smartly, and I think where a lot of this is probably coming from, is that they've really increased like Walmart Plus, their online presence, things like that. Like I am a member of Walmart Plus, right? Because there's been a few times when the thing I was looking for was on Walmart and I would like Google search and it was there and it was cheaper than it was in other places, right? And that's the kind of strategy you need in today's world because I feel like Target captured a lot of the 100K plus people by having a better in-store experience, right? And I think people just liked being in a Target more than being in a Walmart. But, the fact of the matter is, people just aren't wanting to go into stores as much. And their, I think, online, in-app strategy has just gotten a lot better than Target's, right? And like applying that same filter to what I just said, like I can't think of any time I've Google searched and the first thing that came up was a Target product bringing me into Target. But even if it's not the product I want and I end up going with Amazon, right? I frequently do see Walmart there in top of the search rankings, right? So I just think that's the kind of thing that, we criticize Walmart all the time. We're basically saying like Amazon shouldn't exist. They should have never let it happen. And it's true. Walmart could have at various times early stage, like beaten Amazon at their own game with the significantly more resources that they had. And the Amazon's all about supply chain, right? And actually Amazon copied a lot of the kinds of things that Walmart did with supply chain. So, we try to be very even-handed here. And I would say they had a very poor online strategy for a long time, but they've gotten better. And in my opinion, are now beating Target in that. And that's why they're doing better.
So I want to spin to the crypto world. I think it's kind of funny because we have a video on our YouTube channel. It's a short that's like over a year old. And we were asking about, is MicroStrategy overvalued? And the stock's moved a lot since then. It's crazy. It trades like I think a 3 times levered Bitcoin ETF at this point. And as Bitcoin has gone up over the past month or so, MSTR has gone crazy. But a story that came out, which I thought was very interesting, is that Michael Saylor, the CEO of that company, has, gone on this almost tour trying to convince other companies, countries, whoever will listen, to also take on the same strategy that he did of buying Bitcoin and holding it as a treasury asset. And he's going to present in front of the Microsoft board soon, which has, I believe, 78 billion in cash. So we talked about how the USA buying Bitcoin might make other countries follow. If Microsoft did it, I think there's a similar theory that other companies could, Apple and all the other big tech. So it seems like a bullish time for crypto. Um, what do you think of MicroStrategy stock and then just that news story in general?
Yeah, I think that we talk about headline risk a lot here because that's a term that institutional people talk about all the time that is not really very much in the lexicon of retail investors. And headline risk is basically the risk of you either doing something that other people weren't doing and being wrong. Betting on a stock, right? We'll use this example, right? That would be like buying a bunch of Bitcoin like in your treasury like 3 years ago when it was peaking and then watching it go down. That would be the kind of headline risk that could perhaps get you fired if you manage Microsoft's treasury, right? Now, there's another kind of headline risk of this always exists, but these are the two main kinds, right? Not doing something that was obvious to everyone else, right? And I don't think we're in the phase where Bitcoin is obvious to everyone yet. But, for example, right, you do this as Microsoft and, just to use the example, let's say Meta does it too, right? And they make tons of money. They get a big return. The US government is doing it too. All of a sudden, if you're Tim Cook at Apple in a few years and you're also sitting on a mountain of cash and like you're being asked why you didn't also do that, right? That could cost you your job because that's the headline of other people getting it and you don't, right? And I don't think we're there yet, but I do think Microsoft, right? I think we're getting into the phase of Bitcoin becoming so obvious, right? With all the with Trump coming in, potentially very friendly SEC chair coming in, the US, potentially buying it. We've already seen Pennsylvania pass a law that they were going to, or it can't, I don't know if they passed it, but it's coming in about buying Bitcoin reserves, right? We might see other people file. We're getting into the territory where it's obvious enough that enough people are going to pile in, right? And that's how we're kind of seeing it start to move, where it has bad days, right? It had some bad days. And that doesn't cascade into worse days, right? That's other people basically being like, this might be my chance to get it, before it hits 100K, 200K, right? And I think that that's what we're going to see. We're going to see a lot of people aggressively buying dips unless, something changes markedly with the administration's attitude on cryptocurrency. And I don't really seeing that be the case, right? I think we already have said that when it started to go up, where it's just like, well, and we got into it now. We have 2 coin positions, and typically we don't double up and hold for this long in our smaller high conviction portfolio. But to us, it was just that obvious, right? And to us, I think we're going to get a lot of people, institutions, whatever, kind of saying to themselves, like, shit, we better get in on this, like, as to not look stupid for not getting in on it. And I think that, like, if Microsoft buys, I think you'll probably see, a slew of other companies start to buy, use their treasury to buy too, because they've just opened up a can of headline risk, right? And especially if you're sitting on a lot of cash, and Microsoft like does well with it, and they're like, you're basically opening yourself up to getting fired, right? Because that's the reality. Headline risk is what gets you fired. And it doesn't just have to be that, but if you're the CEO, it could be that you missed something going on, or you didn't, you launched a product that didn't make it, right? Well, and that's the headline risk of basically, like we talked about, spending money that you shouldn't have and being wrong, or, missing the obvious. So at the end of the day, most CEOs, I'm not going to say all CEOs, most CEOs are more risk managers than risk takers, right? right? So the second the managing risk becomes buying Bitcoin, so as to not look stupid and be left behind, then you're just going to get a lot of people buying it. And I think that's what we're seeing now. People starting to realize that that is where this is going.
Well, you mentioned sitting on cash, and I was thinking while you were speaking, what if Warren Buffett's plan this whole time with Berkshire Hathaway building this cash position is to go into Bitcoin? What are the odds that we see Berkshire being led by Warren Buffett make any Bitcoin purchase over the next 12 months? What would you say?
Low, little to none.
Really? Even if like Microsoft?
Yeah. I mean, he needs to understand the value of something, right? And if he was going to momentum trade, I think he would have dipped his toe in a little by now. I'm not saying he would have thrown that whole cash mountain, but I honestly think what we're looking at is a market that just doesn't fit him, right? It's going to be very interesting to see what, if anything, he goes into. I mean, I think he will. I mean, who knows? But the valuations are not where he wants them. Like, the market is overvalued, right? But there's two things. There's accepting that the market is overvalued by traditional valuation metrics, but then also seeing that like the normal courses of action that might cause a market correction don't exist if that administration is known to care about stock prices and known to understand what legislation needs to be passed to keep the stock market up, right? So it's kind of interesting. And like sometimes what makes investors the best can also be a weakness, right? We always say the Amazon story, how Buffett, that's one of his biggest regrets, passing on it, because that wasn't in his valuation multiple, and he regrets that, and he should have been more open-minded, right? I think at the end of the day, we might just see a stubborn Buffett that just says, this is not in my comfort zone. These are not in my valuations, and just be on the sidelines, right? And you know, he might not be wrong because he might not carry it up to the top, but he might just say, look, this thing's going to fall hard at some point, and I'll be waiting with my cash whenever it does fall hard. Because if there's one thing that propping up the stock market always means, it means there's going to be the more you do things to prop it up, the harder the fall is going to be eventually.
Yep. We got a comment from Jonathan about how he noticed MSCR with high upside breakout back when it was $120. So basically up 4x since then. So that's cool that he saw it in there so much lower. Hopefully you took advantage of that, Jonathan.
Yeah, okay. It was kind of funny. One of the reasons that I didn't, and I saw that too. I've seen it at the top of upside, but one of the things that I couldn't pull the trigger on it was I think it had very high profitability, but very low growth, like in the teens growth. And typically that's a hard thing for me to pull the trigger on. And obviously there's not a lot of growth if you're entirely dependent on just how many Bitcoins you can buy, right? Because they're not projecting a lot of like growth necessarily, because it's hard to project a price going up, right? So I'm sure that's challenging for the people that forecast. But yeah, you know, it's one of those things, you know, and that's what I always tell people about Prospero, right? I don't necessarily like to teach how to use it too much, because everybody should find their own way to use it. That wasn't in my comfort zone. I have my own comfort zones for like what I like to pick when I like to, you know, quickly cycle through things, when I'm just like, nope, this one's slightly better, that one's out. But no, I mean, I think clearly there were institutions that believed in it long-term for a long time. I think it's been at, you know, 80 or higher. Most of the time I've seen it at 90 or higher. And there's a lot of conviction there, and wasn't really in my risk profile, wasn't really in my target area. But that's why, like, yeah, hopefully you did buy it and hopefully it worked out for you. Just because I don't like something doesn't mean the signals don't like it. We like different things sometimes. And, you know, we hope that people can pull the trigger on the things that align with their views and Prospero also likes, because that's the most important thing, that it aligns with your views, not mine, right? At the end of the day, your money, you own the outcome. It should be what you like. And, then hopefully Prospero can confirm that and help make you some money.
So one stock that is not doing as well as MSTR today is ELF Beauty, because a short fund called Muddy Waters, which is a great name for a short fund, that was great branding, came out and said that they believe that the company overstated its revenue in the past 3 quarters. And they gave some statistics about how they tracked like the bulk shipping that the company was doing versus the revenue that they reported. So if you're a shareholder in this company, how should you feel after this happened? But then also, I was curious, if this company is, if it's going through investigation and there's fraud, or any company, and you're a shareholder in that company and you lose money, do you have any recourse to like get your money back, since there was fraudulent like things done by the company, or are you just kind of screwed?
Well, there's like kind of 2 different ways that this is looked at, right? There's like things like accounting issues and things like that, where if it feels like it's an honest mistake or anything like that, like there's wiggle room, right? There's a border between like malfeasance and incompetence, right? And with incompetence, if it's viewed as like run of the mill, whatever, it's kind of hard to win a lawsuit. But there's plenty of things. I've been part of a class action lawsuit, especially after bankruptcies is a little harder. But there has to be like a bigger loss event a lot of the times, and a clear damages, clear bad actors, things like that. But it's possible, right? But there's a lot of kind of dominoes that have to fall in the right way. And a lot of the times, unless it's really clear, you won't even necessarily have like a lawyer, a law firm that wants to take it on, because public companies can drag things out and make it difficult for you. And even if you're a little right, it might just end up costing that much. And there's not a lot of law firms. A lot of the times you actually need someone with kind of like deep pockets, not just a law firm, willing to finance the thing, which is why, surprise, surprise, most of the times these things only work if like some hedge fund or some very high net worth individual, like when I was a part of a class action lawsuit, my first boss out of college, he, out of his single family office, like was the largest shareholder of the companies, of 2 print yellow traders companies. And he actually won a lawsuit that he was planning the whole time. Like he basically saw that they were lying about their bad debt expense, and he was just sitting there like waiting to pounce. And I got wiped out. And it was funny. He asked me like why I was buying the stock. And he was just like, why would you buy the stock? I was like, I don't know. I saw you buying it, like a lot of the stock. It seemed like, you, like I came here to learn from you. I was like, it would seem like I was an idiot if I didn't. And it was like, well, you're kind of an idiot for doing it, because I was planning to sue them the whole time. And you actually were buying the stock. But yeah, like I remember that he got like a return, and he was able to argue in court for his historical return. And me and all the other retail investors that followed suit in a class action, we got like 8 cents on the dollar.
I have a question. Where does that money come from? Like what's ever left of the company or the government?
No, not the government. The government doesn't care. It's always the government. It's always the company. No, I mean, in that particular case, there was a real, these companies really just like go out of business, right? Not like in the first shot, right? There's a reorganization with the creditors. They reemerge as like a more viable business entity, right? And the creditors were going to get paid out. The secured creditors, not the unsecured creditors, and the unsecured shareholders. So yeah, I mean, it really depends. But in that case, and in a lot of cases, the secured debt holders worked with the company to reorg, and they get paid out. Unsecured's wiped out, right? But then they reemerge, and they're at least a viable business for a little longer. Of course, sometimes that happens and it goes into like, it'll just like die slower, right? But what happens with companies that make sense is sometimes companies don't have viable business models anymore. Their creditors know it, and they say like, hey, unless we slash this debt, right, and let them reemerge in a different way with like a more streamlined business, et cetera, this thing's going to die, in the next couple quarters, and then we're not going to get anything that we're owed. So companies die slow deaths most of the time. But sometimes they're just in such bad shape that they just die. But there's almost always secured on the way down, secured debt holders, right, that are first to get their money in any kind of restructuring, any kind of bankruptcy or whatever. And a lot of the times they are incentivized to do whatever they can to make the entity viable, because the entity lasting longer is almost always going to get them paid out more than dividing up all the assets that they have at that given time.
Well, I think the company we're going to talk about next might be at a different stage of slow death than ELF Beauty, but Comcast announced plans to spin off some of their cable networks. So this is one of the like behemoths of the industry. So the networks that they're spinning off are CNBC, MSNBC, E Network, Sci-Fi, Golf Channel, USA, and Oxygen. They're all going to be part of a company called SpinCo, which is estimated to be about $7 billion. It's going to be publicly listed. They expect it to take about a year to take place. But I thought it was funny. They're keeping the Bravo network, home of the Real Housewives. So the breadwinners for the Comcast company, we know who they are now. They're also keeping Peacock and NBC. So we've covered, with the likes of Disney and all these companies struggling with the legacy media and TV. But I think this is just another case. Any interest in the SpinCo company or Comcast after this is done?
Yeah, the first thing that I wanted to say was actually, I forgot. Net option sentiment, like we actually dropped ELF a few days before this because of momentum score and net option sentiment. So if you were an ELF, always good to check. That was the one other thing I launched into my bankruptcy thing, but I forgot to give Prospero the proper credit for seeing these things as it frequently does. Now to Comcast, I think when companies no longer have, good promise, and I remember we talked about Comcast as a company that's just like, okay, it's going to die eventually, right? But how long can you maybe like squeeze some profits out of it, right? This is like frequently like a bag of tricks kind of thing. I checked on the story, right? Comcast is down about 5% in the last 5 years versus up 89% for the S&P 500, right? So this is something that, you can be more profitable by an earnings per share. Like you're going to cut revenue, but if you cut off some of like your profit drags, right, you could be more profitable from an earnings per share standpoint. That's going to help. That's going to delay the bleeding. But some of this is just that, right? Your stock price is just like in a downfall for 5 years, right? There's nothing particularly exciting about your business. If there's more potential to your business, what you do is acquire, things like other networks. And I bet some of that, spinning up other networks, acquire things, like you try that first, right? But if that doesn't work, the next step is always kind of like hacking off your less profitable things. And, what they might just be attempting is to do something to make their stock more exciting, bring in new shareholders, because at the end of the day, any kind of perception that things are, getting better is what's going to keep you alive as a company. So yeah, like this is the kind of thing that a company in a downswing that is kind of out of new ideas does, but it does help the profitability and it is likely to help the stock price. But like we're saying, unless they kind of figure out what to do with their business long term, we're probably talking about a temporary thing.
So there's a very different company, but maybe it's in a similar situation, that being Nike, which is down nearly a third this year and down 22% over the past 5 years. Are we going to see them spin up the Jordan brand? We're going to get a Jordan company stock. What's the playbook for Nike then? Are they going to follow a similar route as Comcast?
I mean, I don't know how that would work for Nike. Like maybe there's like I don't know enough about the Nike brand and their offerings, but like I don't know if you can just like spin off certain shoes, right? Especially like their manufacturing facilities probably make all the different kinds of shoes. Um, I think it's hard, right? I think there's more competitors in the space now, and I think some of those competitors are like more ethically sourced. I think like Nike was one of I feel like the in this first batch of companies that were like very fairly taken to task by some of their procedures. And I mean, the truth is, Nike is both using very low cost labor and then charging a lot for shoes, right? And there's more and more companies, right, that are just okay with lower margins, right? And I think that, that's not necessarily what's eating Nike's business. I think I think Adidas is making, really good shoes and are not just getting killed on branding like Nike used to. Like, I think a lot of what was priced into Nike was Nike just like winning on branding. Um, and once you start to kind of like slip on that, right? It's kind of a different kind of downward spiral, right? Because now it isn't necessarily like Nike's just the shoe, right? There are other options. And then when that happens, all of a sudden your marketing budget isn't as high, right? And then you kind of lose that perception that you're the shoe, right? So yeah, I wouldn't bet on them. I honestly think their best chance is to start to care a lot more about ethical procurement of their shoes, right? And I think if they can change the perception on that, and like honestly, I don't know it enough to know how much better Adidas or anything else is, but they kind of got dinged on that, and to me, they haven't been the same since that happened. So I think there's a lot of brands that kind of have to accept that unless you're willing to meet people in the middle that have started to care about this more. Sometimes you just are going to be on a downward spiral.
All right, I know we're pushing time here, but I just want to get your opinion on GME and AMC real quickly because it feels to me like these are the new fear and greed indexes of the market where when the market's hot and crypto's moving up, the market's moving up, they seem to go. They're moving higher recently. Do you think it's anything more than that, or is that how they're trading right now?
So I think there's some perception. I'll do this quickly. I think there's some perception, right, that the short squeeze is going to be helped by regulations and there's some new thing always coming through the pipe that's going to finally corner the institutions. But for the love of God, like you people just have to understand, I've never seen regulations help retail investors more. Never, not once, right? Every single time it's varying shades of, help for institutions or slaps on the wrist for institutions or whatever. Like nothing is ever like, and look at the way it's going, right? All of these night markets. That's disastrous for retail investors. That's basically giving algorithms, institutions even more advantage because the more it trades, that's less hours that you can pay attention to than the robots. It's all going in the wrong direction. Stop thinking that the government is going to come in and save you. The government doesn't give a shit about you. And for people that like understand these trades enough to say like, oh, the deck stacked against me, but doesn't understand that that's for a reason. And that's because the government has created situations that allow for the deck to be stacked against you. Then you don't understand what you're looking at. Now, one other thing like that I also want to do, GME, AMC are in different positions, right? GME actually has some hope for the future. It looks okay in our signals, but still there's people way overvaluing it based on, the squeeze, right? And like that is just a very low probability event. It doesn't mean it's not going to happen, but for a short squeeze to be effective, you have to sneak up on someone. And you can't sneak up on someone if you're doing the same shit for 5 years. That's not sneaky, right? They understand the playbook. They've adapted to it. Now, AMC is a whole other thing. And people like come on and they like, AMC goes up 30 cents and they come onto our like videos and they're just like, oh, you must be wrong. It's like, no, I'm not wrong. Like, it is a risky company that has diluted massively. And just because it goes up 30 cents in a day doesn't change the fact that they have an SD credit rating. That's selective default, right? I say bankruptcy style. There we go. It's a rating agency that's doing that. And you just have to like wake up and realize that you, random person that just bought a stock, because other people online told you it was good, you don't know as much as me that's been doing this for 20 years, over 20 years, 26 years was when I worked at my first hedge fund. And I've been building things that make me understand the market better through AI for 14 years, doing it outside of the system and trying to make myself smarter so I can make retail investors smarter, right? You do not know more than me. You do not have some angle. You are just some rookie that thinks you're a lot smarter than you are. That's my thing. Hopefully that breaks some people out of the cult. But
I think you're preaching to the choir. Our viewers are better than that. I think that message goes on deaf ears for those people, but it's a good message. I hope they hear it. We'll see you on the other side in the model portfolio update. Interesting, throughout the stream, the markets have gone a little bit higher. So we'll see how it's looking on the other side. Yeah, Jonathan, that's a complete mic drop moment. When I edit our short videos, I don't know if any of our live stream viewers watch our shorts. I add music, I cut them up real nice, add text, try to make them a little bit more engaging for an audience. But with that little burst of energy right there, I think I could just post that little clip and it would go viral with the right audience. But yeah, if you're a normal viewer, I've seen Jonathan's name in here a lot. Taco Dreams, that's a new one. I haven't seen you comment before, but I think it's easy to see how passionate George is about, investing, helping retail investors, and all of the like. So I've seen that time and time again when we bring those up. But I want to take a look now at QQQ and SPY net option sentiment. Like I said, the markets throughout our stream have been trending higher. The QQQ is still negative, but good sign that they're going back to the even line throughout the day. I'm peeking at the QQQ, which is now at 42 net option sentiment, and the SPY is at 23.
Oh.
So the question now is, what does George do? Oh yeah, your rant impressed our viewers, Jonathan and Taco Dreams.
Yeah, I mean, I don't have much hope that it was that'll get through to anyone, but I think that was my best. That was my best shot at it.
Unscripted and live too, so give George some credit. He's just off the dome speaking, off the cuff.
Well, it's just like the funny thing is like I toy with that in my head every time these idiots come and are just like, oh, weren't you wrong? Like, it's just like, no, AMC's up like 12% after being down like it's trading at 40 cents at its old value, right? It's just like, oh God, I can't. I'm on a tight schedule with this. I can't engage with that insanity any longer. I'm glad that that the market's coming back a little bit. I've been holding today, thinking that it might. That's the big thing with this, where it's just like, now I do have some comfort that that longer term, like things like Coinbase and Tesla, are going to do well, and like Apollo, I have a much easier time just being like, oh, well, market's up, market's down a little bit. And I'm staying pretty even long short this week. So that enables me to not have to do too much both ways. Okay, so it's 26.
It is live. It's now 14, just updated.
Wow.
14 and QQQ is 40.
Oh, I'm not sharing yet, am I?
So I feel like your typical style is to pare down the portfolio when there's some kind of binary event like this. Is that kind of what you're thinking?
I mean, no. I mean, the portfolio is pretty well positioned to both ways, both my high conviction and my low. So I mean, I'm just kind of like
Watching from the sidelines almost.
yeah, I'm just like making slight alterations because I like my overall allocation,
Mm-hmm.
and I'm just gonna write that. All right, we've really backed ourselves into a corner here.
Consumer defensive is starting to form a bit of a bearish pattern, and we have been picking on healthcare, but that might be going the other way. Regardless, with all of this volatility, we will be more signal focused than sector targeting. Oh, oops. I accidentally clicked. I don't have time for this. Oh. George, I don't have time for these errors. We gotta speed up. Okay. Wix, interesting. Question from Twitter. Nelly asks, sorry I joined late. Are you guys holding NVIDIA through earnings? The answer is no.
I mean, we'll probably hold it in this portfolio unless we see the signal switch. But like again, this is like an 80 stock portfolio, right? So we're gonna hold one position, but that's not a reflection of our comfort level. If your portfolio is that big, by all means, but I wouldn't hold it if your portfolio was 30 stocks or less.
Nelly, if you go back to the first, I believe we opened up with that topic, so it's like 5 minutes, very beginning of the stream, if you want to see the full discussion on it.
Okay, let's see what we got going here. Wix. We'll do. I think we have two of these. Lemonade's just been on fire. SE. Did we? root has just been so up and down, but we'll do it. You know what? We'll take a flyer on ATEC too. That's not in our typical range, but we'll diversify. Oh no, never mind. We'll take a flyer on all this healthcare oil. LNTH. Actually. Okay. Actually, we're going to do this and LNTH and not this. Okay. Can you tell me about APDs and then option sentiment trend?
APD, net option sentiment, is trending upwards, and it's at a high right now of 87.
Oh, all right. And then, all right, what's going on here? That's going on. Like some interesting names. Do we have any smaller? I'll do this too. Actually, I'm just going to take 2 wicks. What is this? I think we grabbed HGV yesterday, right? All right. No time. It's going to be a close one. Okay. 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 Done. We made it.
All right. So good luck to all NVIDIA shareholders. We will know what's going to happen soon enough. And for everyone, all of our usual viewers, we may be on a different schedule for streams next week because of Thanksgiving. So if you read the Sunday newsletter, you'll know for sure. But if not, we'll be back sometime next week. So see everybody then. Bye
All
for
right,
now.
everyone. Thanks for coming.